Good afternoon, ladies and gentlemen. Thank you for joining us today for PT Steel Pipe Industry of Indonesia (TBK's) 9th month 2025 result call. I'm pleased to share our latest financial and operational performance, along with our updates on strategic priorities as we continue to strengthen SPINDO's position as Indonesia's leading steel pipe producer. There will be two segments today. The first will be our 9-month performance presentation by myself, Felicia Priska, as Corporate Secretary Associate. And, and then there will be a Q&A session led by Pa Johannes as Chief Strategy Officer and also Pa Teja as Vice President Director. Without further ado, let's start with the performance presentation first. Okay. Despite ongoing volatility in global steel prices, SPINDO delivered another resilient quarter. Revenue for the first 9 months of 2025 reached 4.13 trillion rupiah, slightly down 3.5% year-on-year due to fluctuations in hot rolled coil prices. However, our gross profit increased by 5.7% to 820 billion rupiah, with margins improving to 19.7%, reflecting a strong cost discipline and effect product mix optimization. Net profit rose 3.1% year-on-year to 369 billion rupiah, maintaining a healthy 8.9% net margin. This shows that our strategy to prioritize high value and high margin products is delivering results. Through prudent cost control and efficiency measures, we managed to offset higher distribution and foreign exchange costs. Our focus on high-value products and operational efficiency continues to protect margins amid global headwinds. SPINDO ended the 9-month period with a robust financial position. Our current ratio stood at 303% and quick ratio at 94%. Backed by a strong cash balance of 737 billion rupiah. We also managed to lower our debt-to-equity ratio to 58% by shifting our short-term bank loans to long-term. This minimizes our refinancing risk and aligning with long-term projects. Now we move on to cash flow. Our operating cash flow surged at 970 billion rupiah. Supported by stable operations and disciplined working capital management. SPINDO also recorded a 361.3 billion rupiah in net outflows from financing, primarily from short-term bank loans and sukuk and bond repayments. Despite this, SPINDO ended the 9-month period with 737 billion rupiah in cash, providing flexibility to fund ongoing investment in upcoming quarters. The solid foundation also gave us ample room to fund expansion projects, particularly our Plant 7 in Gresik, where we are investing 700 billion rupiah in 2025, 300 billion rupiah in 2026, and 80 billion rupiah in 2027. This project is a key milestone in SPINDO's growth journey. Our return on equity and return on asset are also stable with 9% and 5.9% respectively, reflecting our stable profitability. Our EPS is 52 rupiah per share, indicates a steady performance. Our sales volume also remains stable at 253,000 tons, supported by strong demand for high-margin products. Notably, we can see that the spiral pipes API sales grew nearly 8 times the amount compared to last year, boosting the oil and gas segment contribution to 7%. We are also seeing robust growth in stainless pipes, strips and plates, and also services. At the same time, we also expanded our local raw material sourcing, increasing it to 42% compared to 28% last year. We also utilizes new raw material suppliers, including Lautan Steel, New Asia, and Dexin, to support our local purchases. This not only reduces our import dependence, but also enhances cost efficiency and supply chain resilience. Our average selling price for black pipes remains strong at 15,000 rupiah per kilogram, maintaining a healthy margin over local and imported HRC. As the HRC prices stabilize, we see a more favorable cost environment going forward. Now we move on to the upcoming strategy, which is the key element is Plan 7. Plan 7 is the cornerstone of Spindo's next growth phase. This facility featured two new high-tech ERW machines, one for small diameters up to 8 inches and one for large diameters up to 24 inches. These machines is powered by advanced robotics, will enhance efficiency and capacity significantly. Production from our 8-inch line will begin in early 2026, followed by the large diameter line in the second quarter of 2026. These additions will allow Spindo to tap into higher margin segments like API pipes. As we can see from this progress line for our Phase 3A of construction, we are in line with the plan as of October of this year with 94.2% of completion. Hence, we can reach the target on time, which is in December of 2025. Looking ahead, our strategy remains centered around sustainable and profitable growth. Key initiatives include strengthening relationships with end users, reducing inventory and improving the cash conversion cycle, continuing debt optimization and funding diversification, accelerating our digital transformation, and also advancing towards Industry 4.0. Our vision remains clear, which is improving quality of life by delivering reliable, high-quality steel solutions that support Indonesia's industrial and infrastructure development. Next, Pak Johannes will present the market outlook for the third quarter. Pak Johannes.
Yeah, thank you, Priska. So as you can see, global condition is not yet recovered. Yeah, there's a lot of still uncertainty. Although we saw some improvements in Europe as well as in US. However, this uncertainty also reflected by the increase of gold, yeah, in the market. For global steel itself, the steel is still under pressure, yeah, because there's still oversupply from China due to the weak global demand. Next slide.
Sorry.
Yeah, just want to illustrate, yeah, the blue one is the 2024 price, yeah, for the hot rolled coil, and the red is 2025. This is for 1 year from January to end of September. You can see that actually in 2025 the price is stable, yeah, it's relatively stable, but lower than the previous year. So that's why it does affected our ASP, yeah, average sales price. So it looks lower. However, as we mentioned before, the net profit is increasing, yeah, due to the one of the factors also due to the product mix. Yeah, so you can see that the volatility of the steel price is indifferent to us. Next. from its supporting commodity, coking coal has been improving. The price has been increasing from the lowest approximately 170 to right now approximately $200 per ton. And iron ore for 65% FA is now 105 from its lowest ranging from 90. This create some kind of a low or floor price of calculated approximately 460 to 470 US dollar per ton. Because to make 1 ton of steel, we need 1.3 ton of iron ore, coking coal, and other raw material, also energy. So that's create a very narrow floor price. So we believe at least in a short while the price will remain stable. But this is due to the higher cost rather than the stable demand. Next, in Indonesia, I wouldn't talk too much about the domestic condition. I believe our friends from Analyst has been thoroughly analyzed. But for us, the policy it looks like benefiting for us. Yeah. There's a lot of efforts to protect Indonesian industry and not only steel from import, especially for illegal import. So we believe all of this policy combined with the Indonesian PMI, which is still on the expansion area, will create a strong future for us. Yeah. So this is the short short term market view, which is very positive, yeah, very optimistic. I think that's all, Priska. Yeah.
Okay.
Do we have other? Yeah. Okay, that's all.
Okay, thank you, Pak Johannes, for the presentation. Now we move on to our ESG practices. Our sustainability linked bond, launched in 2024, supports renewable energy, targeting a 35% increase in green energy generation over 7 years. Recently, solar panels have been installed in Plant 3, adding a total installed capacity across 6 plants to 2,700 kilowatt peak, which significantly reduce our carbon emissions. We also continue to expand our CSR programs, including providing access clean water in regions with no running water. This is in line with the Sustainability Development Goal number 6, which is clean water and sanitation. Earlier this year, we did this CSR to Gunung Kidul, and currently we are commencing the CSR program to Wonosobo area. For this guidance outlook, Pak Johannes, will you present?
Okay, so basically with the current condition, yeah, with the current latest update, we slightly adjust the top line due to the lower global steel price. The top line is approximately going to be slightly lower, but the profit still expected to be in the range of 5 to 10% increase from the last year on year. Yeah. So at the moment we are booking 369, almost 370 billion, which is increase of approximately 3 point something percent, yeah, almost 4% year on year. So uh, usually the Q4, Q3, Q4 is stronger than the Q1, Q2. So we believe we still can achieve the projected target. Uh, on the longer horizon, with the uh, uh, timeliness of the Unit 7 progress, we still believe optimistically we can reach this target projection for 2027, of which almost 1 trillion net profit.
Okay. Okay, now this is our selected projects from January to October of 2025. The projects are mostly from logistic projects, including the construction of ports and also uh, in ports and also in IKN. In infrastructure, there is projects in uh, mainly in roads, toll roads, and also in oil and gas machinery. There are some projects. Recently, there is Project Batu Hijau. Okay, that is all for the presentation for the 9-month performance. Now we can move on to the Q&A session. Pak Johannes, Pak Teja will. Okay.
Okay. Thank you. Pak Teja, I think we have first question from the previous registration. Yeah. Basically, I already answered briefly, but maybe you can tell about the progress of the Unit 7, including the estimation of the commencing for this Unit 7, please.
Okay. Unit 7, basically the machine is already almost 8-inch machine. The first machine, 8-inch machine is almost finished. Sign our team already visit the mill to see the first trial. So we bought the strip and we did pipe production there. But with some, we need some adjustment from the pipe machine. So I think hopefully within this month, I think they will be ship everything, the machine. So arrival maybe end of the month. Yeah. So then installation around in December and production in January next year. So the second machine, so according to the schedule, will be delivered in December. Maybe some 8-inch machine with some delay because of the holiday, long holiday in China in the 1st October. But 20-inch machine hopefully more smooth, and hopefully then if there's some delay also in January. Yeah. So, and maybe not so much delay. Yeah. So we can run we can do some commercial production for the second machine probably in about March next year.
Okay.
The building itself is almost completed. So also we do some infrastructures, everything, and also the crane and other facilities also accordingly. So parallelly we will install.
Okay. Another question, maybe a bit general. How do you see next year, especially with the current policy by the government, especially maybe Pak Purbaya with his effort to eradicate illegal import?
Yeah, illegal import is good, yeah, basically to stabilize also the price. But again, the important thing is how to get the order, how to get the project itself. So we strengthen also our sales, and especially for oil and gas, we hire several people, and we will focus more on the project, especially also oil and gas. And hopefully oil and gas. So there is one project is going to be started in this year. Is to
Semarang.
bukan to in Pekanbaru.
Oh, Dumai.
Dumai to
Yeah.
Medan ya sini. Semangke.
Semangke. Yeah.
Dumai Semangke is quite long. I think about 500 kilometer. So it's bigger than the Cirebon Semarang project. And this will be start in next year. Also, we hope another project because of the government also with this new machine. There is some product also we would like to participate, especially for drilling sectors. Before we could not participate this project because we didn't have a machine. Now with the new machine, we hope we can also participate for this kind of a drilling project. Yeah. Because as you know, government also push so much to increase the production of the gas, especially. Already several projects have been tendered, and several projects also will be start in project will be start in this year. Yeah. So hopefully, so the project also will help us also to increase our sales, especially for oil and gas.
Yeah, Pak. Sorry. With that remarks, Pak. Actually, there's another question. We always emphasize oil and gas, but is the new factory only targeted oil and gas? I believe the answer is no, but you can,
Yeah.
yeah, you can elaborate, Pak.
Yeah, of course, the oil and gas is one of the very important for us. Is because of the first is because of margin, high margin for oil and gas. And but of course, we don't focus only for oil and gas. So we will focus also for others than oil and gas. Yeah, especially for like the steel column. But steel column in Indonesia is not so popular yet. But we hope, yeah, so we can make it become more popular, and because we now can produce. Before, mostly the column is made by plate. So because not so many, I think no company produce column yet for piping. But column is just, I think it's quite common. It's used already for several like a high-rise building in the overseas.
Yeah, thank you, Pak Teja. So the answer is yes. The answer is no, yeah, not only oil and gas, but other application as well. Pak Hendy, can we know? Do we know the sales volume target? Sales volume for last year approximately 360,000. So for this year, we targeted at least 370 something. And then for the next year, due to the new 8-inch machine, smaller one, we only conservatively target 10% increase, so roughly 410,000. Yeah, but of course, this is all on the lower side. Yeah. Okay. Next question, Pak Teja. How about capex, Pak? We targeted for 700 this year, but I believe we only spend approximately 270 up to 9 months. Is there shifting to next quarter or next year maybe?
Oh,
maybe just the timing, Pak. Yeah?
hello?
Just the timing of disbursement of capex.
Yes. Yeah.
Yeah. So the capex is not reduced, but only the timing of disbursement is moved to October and January next year. Okay. Let me check. Okay, I think, yeah, we do not have any further question. I think, oh, Pak Hendy is out. Okay. Pak Hendy, can you write whether you have got the answers or not? I believe I answer you, but maybe you are out just now. Yeah, I don't see any further question, Pak Teja. Surprisingly, I believe thanks to our investors already been very fully informed about our strategy. Yeah. Yep, no further question. Yes, Angus.
Oh yeah, hello. Can you hear me all right?
Sure, yes.
Yeah. No, I just wondered if you'd give a little bit more color on the demand coming from the oil and gas segment. Because obviously that's a very strong growth area, and is there more color that you have for in terms of demand coming from the industry? Is the government actively still promoting the investment in the industry? So I think their targets for production are quite high, and there's lots of new wells being opened up. I mean, what kind of what portion of sales do you think will come from oil and gas on, say, a 1 year and a 3 year view, just to give an idea of how the demand in that segment is shaping up? That'd be great. Thank you.
Okay, ultimately in 2027, we targeted approximately 17 to 20% revenue from oil and gas sector. In 2026, I think it's only approximately maybe 10 to 12%, because in 2026, the machine that is fully run is only our new 8-inch machine, which is not so much different from our existing specification. Yeah. However, of course, the machine is much different in terms of productivity and efficiency. So with the same product, we can obtain more benefit and more more profit. But in 2027, where our 20-inch machine is already running full, yeah, we targeted approximately 17 to 20% from that segment. Angus, I hope that answers your question.
That's very exciting. And what would be the kind of the margin differential on the products you're selling to the oil and gas industry and the products you're selling normally? And obviously there's the 8-inch and then there's the 24-inch. And are they very different in terms of the margins you can generate?
I think for oil and gas products, generally similar margin, but I believe, of course, the some product that is not yet produced in the domestic is give us maybe higher, I don't know, 2-3% margin, maybe, Pak Teja.
Basically, I mean, in terms of like the price, maybe not so much a different price, but because of the machine, the capability, also efficiency, and also some of the productivity, I think we can get more margin. Also, the yield ratio. So I believe can be some additional, I think more than 5%. Yeah.
And then the other question I had was, obviously there's been a significant shift in terms of your sourcing of raw materials to domestic suppliers, and how much more do you think that can increase? And that obviously, what does that do to the overall margin picture? I mean, I guess it means you're less sensitive to international price fluctuations, I guess. I mean, what's the differential in terms of the sourcing cost for domestic versus international?
Yeah, silakan Pak Teja.
Now, for domestic, now the price is very, very competitive. But certain products, certain sizes, still they cannot produce. So it means some sizes we still have to import. But this is mainly only for hot coil. Yeah, hot coil now mostly maybe in the future, our purchasing from domestic will be more. I think can be maybe more than 70%. I think for hot coil only. Yeah. For oil and gas, I think for depend on the specification. Currently, for the high grade like more than X65, I think locals cannot produce. So I think we have to import.
But I guess that cost can be passed on to customers for oil and gas.
Yes.
And I mean, obviously the sensitivity to fluctuations in the steel price, it looks to be reducing over time. I mean, I think that's the key, isn't it?
Yeah.
To understand.
Yeah.
And that's obviously been reflected in recent numbers as well. But yeah, thank you very much. That's very useful.
All right, thank you, Angus. Pak Hendy, seasonality ya. Like last year, the first half contribute approximately only 40 to 44% of the income and the volume, and the rest is acquired in the second half. So yes, I can assume the same in 2026, whereby the later semester will be higher in terms of volume and revenue. Maybe you want to add something, Pak Teja, for the seasonality issue?
Yeah, seasonality usually based on the government spending. That's why usually government spending in the first half is quite slow. Yeah, in second half, I think end of the government budget, they will push more and more. Yeah, that's why the second half is always higher than the first half.
Right. And
I had one more question, just on the breakdown between demand coming from public, from the government, sort of public companies and public institutions, and that coming from private. How does that break down?
It's roughly 50-50 ya, Pak Teja, from private and government.
Yeah, because sometimes we don't really know about like some small project from the government, because normally they are buying through our distributors. So we don't really this is from government or not, we cannot divide it.
So visibility is limited, yeah.
Yeah, and sometimes even the government use local contractors, local private contractors. You wanna count that as a private or government. Sometimes the private sectors use government SOE contractors. Whether you want to count it as a private or government is a bit difficult, because some like mining, they also build jetties, right? They use maybe one of those AOEs, So, but roughly our visibility is roughly 50-50.
Okay, thank you.
About the increase in dividend payout ratio, yeah. Well, at the moment, Unit 7 is our biggest investment. Yeah. After that, as you know, our annual capex will be roughly 50 to maybe 70 billion. Yeah, maintenance capex every year. So yes, going forward, we believe there's a possibility of reconsider of the payout ratio. Actually, even the current payout ratio is not yet up to target, which is 25 to 30%, because we are still investing, and once we complete the investment, I believe there is possibility that we met that target. Okay. From Mr. Rory, that the 2037 revenue profit target highlighted, I think given the guidance, net profit, yes. So the key, Mr. Rory, Mr. Dixon, is in the product mix itself. Yeah. As I mentioned before, the target mix for oil and gas sector for 2027 is 17 to 20% in the oil and gas, of which we have already discussed. It have a lot of significantly higher margin. So yes, the target revenue and profit in 2027 is realistic, and actually it's on the lower side. It's on the conservative side, because we only assume less than 10% utilization for the bigger machine, to 20-inch. Of course, the additional profit apart from the product mix can also obtain from the efficiency of the machine, like Pak Teja mentioned before, because the new machine will yield significantly better and the product quality is higher, with less cost, with less cost because there's automation and robotics component in that machine. Okay. Do we have another question? Yes, you're welcome, Mr. Dixon. Okay, Pak Teja, sorry. With the low CapEx going forward, when do you think the target to become debt free? Okay. We never targeted to be debt free actually, because debt is part of the business. But of course, we are looking to reduce the leverage. Using debt is not entirely wrong, as long as we can manage the cost of fund. Yeah. Like what we are doing now, we are reducing the leverage, but still we issue, bonds to balance the cost of us for funding sources, just to manage with the risk, something like that. Given the current oil price, how confident is the company that the increased steel oil and gas product will be fully absorbed by the market? Yeah, actually, it's not only of the current oil price, but also the Indonesian energy security strategy. Yeah, we need the energy security. So, and Indonesia is not really on the oil side. Yeah. Indonesia is more on the gas side. Yeah, maybe Pak Teja want to add on that?
Yeah. So maybe everybody's already know just Indonesia oil production is we cannot hope so much to be increased a lot. Yeah, because of mainly it's already almost I would say almost nothing's improved for the oil. But for the gas, Indonesia still have a lot of reserve of the gas. Yeah, in last time they found some new reserve, big reserve in Aceh, and will be operated by the Aramco. And last time also they have a tender for 5 well. One is in the near Irian, I think in Papua. Yeah, also already will be built soon. And I heard also the Marcella project also under progress. And oil is very important for Indonesia because, gas is very important for Indonesia because of the government basically want to reduce the subsidy of the LPG. Yeah. Now, because LPG is quite expensive, and let the people, it's like housing, every house also can use the LNG. So LNG is very safe compared to the LPG as a gas. This gas also LNG is much cheaper than the LPG. So I think the demand for the gas will be higher and higher. Yeah. So that's why also I think we have a roadmap also for the gas, not only for Indonesia but also for the Asian country. Yeah, only to Singapore, also to Malaysia, to other countries as well. So this is very unique and very also interesting for our project for the future, especially for our Unit 7.
Thank you, Pak Teja. Yeah, I hope that answered the question. All right. If there's no more question, last chance, everybody. If you have any question, just raise your hand first. Yeah, I don't see any hands raised. Go ahead, Priska. Thank you.
Okay, thank you, Pak Johannes and Pak Teja for leading the Q&A session. Okay, so we are now at the end of the result call. Thank you to all the analysts who stayed until the end, and we really appreciate your active participation and the question that you've shared with us. We hope that this call has been useful and provided positive insights about Spindo. See you at our next event. Have a good rest of the day.
Thank you.
Thank
Thank you. Thank
you.
you.
Yeah.